Hello, good morning and welcome to Business 360. My name is Blyden Ukem. Big apologies for coming behind schedule. A part of a conversation on Business 360 today, we'll be looking at a White House as the AI shutdown exit, and we begin from there. White House economic advisor Kevin Hassett has said the government shutdown is likely to end sometime this week, though one that if it doesn't, the Trump administration may resort to stronger measures to pressure Democrats. Hassett's remark came as the shutdown enters its third week with no resolution in sight amid partisan standoff over federal funding. Republicans are pushing for a short-term funding bill to maintain current spending levels, while Democrats insist any deal must include expanded healthcare provisions, specifically an extension of Enhanced Affordable Care Act tax, the tax credit set to expire at year's end. Still under foreign scene, the European Union energy ministers are back to plan to phase out Russian oil and gas imports by January 2028, according to the Council of European Union. The proposal approved at the meeting in Luxembourg would ban new Russian gas contracts from January 2026 and short-term ones by June 2026 and terminate long-term deals by 2028. The law still requires negotiation with the European Parliament before becoming final. The move aims to cut Moscow's energy revenue that helped fund its war in Ukraine. Russia now supplies about 12% of the EU's gas, down from 45% before the 2022 invasion, with Hungary, France and Belgium still importing. The proposal was crafted to win approval despite resistance from Hungary and Slovakia and required a qualified majority vote so that one or two states could not block it. Flexibilities were included for landlocked countries. Separately, the EU is preparing a new sanction package that could ban Russian LNG imports a year earlier by January 2027. And now to Canada, as Canada has granted tariff relief on select steel and aluminum imports from the US and China to support domestic industries hit by trade tensions. Prime Minister Mark Carney is in talks with US President Donald Trump, who imposed tariff on Canadian metals, while also engaging Chinese officials to ease levies on Canadian agricultural exports. In response to economic strain, Carney has reversed many retaliatory tariffs previously placed on U.S. goods. A recent amendment to the 2024 surtax remission order. The surtax remission order allows duty-free entry of certain Chinese steel and aluminum products not manufactured in Canada. The order took effect October 15th, with further details to be released November 5th. Additionally, the Ministry of Finance exempted some U.S. metal imports tied to public health, national security, manufacturing, agriculture and food packaging, according to an official document. And now to Africa. The West African midstream and downstream regulators have concluded plans to form a new forum to harmonize fuel prices and strengthen petroleum products trading across the region. The move was one of the key outcomes of the inaugural West African Refined Fuel Market Conference, jointly organized by the Nigerian Midstream and Downstream Petroleum Regulatory Authority and S&P Global Commodity Insight, which took place in Abuja recently. The conference themed West Africa, a refined fuel market, pathway to regional reference market, focus on enhancing petroleum products and natural gas pricing and quality standardization reflective of West African market fundamentals, improving markets and data transparency, and accelerating downstream investment through trade zones and digital market platforms. According to a communique issued by the Nigerian Midstream and Downstream Petroleum Regulatory Authority's Public Affairs Department on its website, the West African Regulators Forum and the Technical Working Group will be constituted to ensure effective coordination of the conference outcomes and follow-up actions. The Nigerian Midstream and Downstream Petroleum Regulatory Authority, in collaboration with the African Refiners and Distributors Association, is to oversee the activities of the forum, the communique stated. In Nigeria, Nigeria is stepping up efforts to manufacture its own vaccines after the COVID-19 pandemic exposed the country's dependence on foreign supplies, according to the National Agency for Food and Drug Administration and Control. The agency's Director General, Professor Mojisola Adeye, has said Nigeria must team up and learn from the global vaccine shortages experienced during the pandemic and take concrete steps towards vaccine self-sufficiency. Despite having one of the continent's largest pharmaceutical markets, the country still relies almost entirely on global partners such as Gavi, the Vaccine Alliance, and UNICEF to meet domestic demand. And now to Nigeria's power sector, as power generation companies have said that discussions with the federal government on the 4 trillion naira power sector legacy debts are still ongoing. This is despite the federal government's claim that the implementation framework for the 4 trillion naira the debt reduction had been finalized with the GENCOs. The Chief Executive Officer of the Association of Power Generation Companies, Dr. Joy Ogaji, confirmed that the operators met with top government officials to discuss modalities for settling the outstanding debt, but stressed that no concrete agreement had been reached. Last week, the Special Advisor to President Bola Tinubu on Energy, Olu Verhejin, disclosed that the federal government had taken a major step toward restoring financial stability and investor confidence in the electricity market with a finalization of the implementation framework for the Presidential Power Sector Debt Reduction Plan. However, Ogaji said there was nothing finalized yet with the federal government as far as the 4 trillion naira debt was concerned. The Minister of Power, Adeba Delebu, had earlier announced that the federal government has approved a 4 trillion naira bond for the deferment of the legacy debts. But the GENCO said they were not carried along by the federal government or the Nigerian Bulk Electricity Trading Company. Still in Nigeria, a multiple observation indicates the debt disputes and drama as MAX A pilot refuses to fly. According to report, a drama unfolded at Maiduguri International Airport on Monday as over 100 MAX A's passengers were left stranded for hours due to a face-off between the airline's pilot and management over unpaid debts. The incident caused panic and confusion among travelers who had already boarded the aircraft and were awaiting departure. According to an eyewitness who refused to give her name for a fear of the unknown, the pilots refused to proceed with the flight, which the flight attendants blamed solely on the pilot's unpaid entitlement. The shocking development held the scheduled airline to ransom for some hours, sparking tensions among the passengers, with the development forcing them to disembark in frustration after being informed of the dispute and refusal of the pilot to fly. Meanwhile, Nigerians consumed a total of 613.62 million litres of premium motor spirit, popularly known as petrol, for transportation, power generation and other domestic uses between October 2024 and October 10, 2025. This is according to data from the Nigerian Midstream and Downstream Petroleum Regulatory Authority. Despite the ramp-up in operation at the Dangote Petroleum Refinery and other local plants, imported petrol still accounted for a larger share of the country's total fuel supply during the period under review. Out of the total 613.62 million litres of premium motor spirit consumed between the said time, the data revealed that 236.08 million litres were supplied by domestic refineries, while 377.54 million litres came through imports. The figures indicate that imports are dominated supply, contributing about 63% of Nigeria's PMS needs, while local refineries are led by 650,000 barrels per day. Dangote Refinery provided the remaining 37%, marking a significant improvement from the previous year's level. The data further indicated that domestic production rose steadily from 9.62 million litres per day in October 2024 to 18.93 million litres per day by October 2025, showing a near 100% increase within a one-year period. Meanwhile, petroleum products marketers in Nigeria say the price of premium motor spirit known as petrol would drop in coming days as Dangote refinery resume loading of the products to members. The president of the Independent Petroleum Marketers Association of Nigeria, Abubakar Maingadi, discloses. Maingadi confirmed that its members had begun loading petrol at the refinery. According to him, the development would ease the fuel supply shortage nationwide. He noted that availability of fuel among its members would certainly reduce the price of petrol. Similarly, the national president of the Petroleum Products Retail Outlook Owners Association of Nigeria, Billy Gillis Harry, hinted that the availability of the fuel would push the price down and bring relief to Nigerians. And now we'll go on a quick break, and when we're back, Business 360 continues, looking at global economic standings around the world and the markets. Don't go anywhere. Welcome back. It's your Business 360, and my name is Vladimir Kim. And now straight we go to the markets as gold pauses rally. Gold fell to around $4,320 per ounce today, likely due to profit taking after the metal surged to a fresh record in a previous session and ahead of U.S.-China trade talks that could ease broader uncertainties. Treasury Secretary Scott Bessent is set to meet Chinese Premier He Lifeng in Malaysia this week, ahead of high-level talks between President Donald Trump and President Xi Jinping. Meanwhile, expectations of a 25 basis point Federal Reserve rate direct cut later this month, with another likely in December, continue to underpin the non-yielding metals appeal. Investors now await Friday September Consumer Price Index report for further insight, which has been delayed due to the shutdown. And now we go to the market. First, the metal market. Afterwards, we'll look at the energy and the agricultural market. The metal market. Let's look at the state of the metal market. The metal market indicates the price of gold. A gold price at $4,267 US per ounce, falling by 89 points this morning, and gold price a negative 0.206%. And we're talking about a silver price falling by 2.758 points at $49 US per ounce, a negative 5.27%. Copper price also dropping. Steel price gaining but slightly. The metal seem to be struggling. And also energy market. Energy market indicates the price of crude oil, U.S. crude at $56 US per barrel, downward by 0.067 point, a negative 0.12%. Brent, representing Nigeria's price, benchmark at $60 US per barrel, downward by 0.065 points. This morning, natural gas gaining but not significant change, 1.17% again, and gasoline, heating oil dropping. Now to agricultural markets. Agricultural market indicates the price of soybeans at $1,036 US per bushel, gaining 5.24 points, a 0.51% appreciation today. A wheat price at $504 US per bushel, a downward just slightly, a negative 0.05%. A lumber price falling by a negative 3.79%. A palm oil at a price of 4,511 Malaysian ringgit per ton, downward by 3 points, a negative 0.07%. And now we move to the financial market and talk about the state of the Naira as Naira rebounds with strong gains against US dollar. The Naira rebounded with significant gains against the dollar at the official market this morning, recovering Rather, yesterday, looking at yesterday's market, which gives a direction to today's market, recovering from losses recorded on Friday, October 17, 2025. A data from the Central Bank of Nigeria showed that the naira appreciated to 1,465 naira 29 kobo per dollar on Monday, up from 1,475 naira 35 kobo on Friday. This indicates that the naira strengthened by 10 naira 6 kobo against the dollar compared to the previous week's closing rates. At the black market, however, the naira remained stable at 1,500 naira per dollar on Monday, the same rate as on Friday. Last week, the naira had depreciated by 20 naira 18 kobo against the dollar on a week-on-week basis. And now let's go to the market. The US dollar against the naira first. Afterwards, we'll look at the state of the Euro USD market and the crypto or currency market. The US dollar against the naira. US dollar against the naira price level stands at 1,467 naira 15 kobo to the US dollar. The dollar gaining but not significant of a change in the morning market. Well, the euro against the naira, 1,703 naira equaling 1 euro. A euro falling by 4 points against the naira, and the pound, 1,961 naira against the pound falling by 4.9 points against the naira. And now to the Euro USD market, the Euro USD market. Euro USD market, a price level stands at 1.162 US dollar to 1 euro. The euro are falling just slightly, negative 0.18% against the dollar. The pound also falling against the dollar by 0.19% at 1.338 point mark. The Aussie also falling against the US dollar. The US dollar is predominant and gaining against the majors. Now to cryptocurrency markets. A crypto market begins with a price of Bitcoin at 107,814 US dollar for 1 Bitcoin. Bitcoin falling this morning by 2,782 points, a negative 2.52%. Ether also falling by 111 points. Binance dropping 30 points, a negative 2.73%. Cardano, Solana, Ripple, a total bloodbath this morning in the crypto market. As we set to close, we're looking at the stock market as Transcorp Hotel posts 22.4 billion naira in the third quarter. But let's look at the African stock market as we close. A Nigerian stock market price level stands at 149,941 index points, gaining 963 points, 0.65%. On the other hand, South African stocks, SA All, are falling by 1,708 basis points, and SA 40, another South African stock, falling by 1,639 index points. Egyptian stocks, EGX 30, dropping 131 basis points at 37,844 index points, and stocks from Nairobi, Kenya, at 2,985 index level, gaining by 34 basis points. Well, as distraction from the market, as even yesterday we saw the Nigerian stock market recording strong opening and adding 611 billion naira to market capitalization. So from what we're seeing today, it's giving a picture, or this morning rather, giving a picture to what could happen even further as the day progresses. But it's a story of business and economy. Thank you for being a part of it. My name is Vladimir Kim, and thank you for watching.